All right, so if you're looking into learning how to trade, or you have started learning and you just are wanting to start, this is everything that you need to know first. I'm just going to show you guys pretty much exactly what you need to get started without all the hype, because realistically it is heavy and there is a lot to go over, and there is a lot to learn. I mean, it's not sunshine and rainbows. And so we're going to go over that. I just want to say though, this is not financial advice. It's just, if you are looking into it, that's your own prerogative, your own decision, but these are things that you should know or look at before going all in with trading. First of all, you need to know that there are very many different types of trading. There's day trading, swing trading, scalping, position trading, etc. A lot of people, when you say trading, they think, oh, you put money into Apple or you put money into Tesla and you're in there for years and then you'll make money. That is not what we do around here. We day trade around here, we scalp around here, which I assume is most people who are watching this, that's what you guys are trying to get into, where you're in and out within a day, in and out within minutes, seconds, whatever. So first of all, you need to figure out what type of trading you want to be doing, right? Like, the next thing I'm just going to say is like basic terminologies. Buying and selling, what does that mean? Spread, volume, liquidity, leverage, stop losses, take profits, stuff like that. If you are not aware of all these things and how they have anything to do with the market, it's going to be very difficult for you. These are all key things in trading, so it's important to know about them. Second thing is risk management. You never want to be risking more than 1 or 2% of your capital per trade. A lot of people don't understand that. They just throw in whatever, they get into a trade, they have no idea what they're going to win or lose going into it. They don't use stop losses, they don't understand position sizing, which is, okay, what is my lot size and what does that mean? How much do I get if I win this trade? How much do I lose if I win this trade? Which helps you understand percentage. Too many people are looking at the dollar sign. It is not about the dollar sign, it is about the percentage. That's where risk to reward comes in. That's where risk management comes in. That's where your capital comes in. It's all about percentage and not about dollar signs. You can't be greedy and be like, oh, well, I want to make this amount today. No. You want to make sure your goal is to hit this percentage a day and not lose more than this percentage a day. Go about it in percentage. Truly. I can't even say that enough. Third thing, psychology. Avoid FOMO. You're not missing out on anything. If the market's trash, the market's trash. Shut your shit off, go do something else. Realistically, that'll save you so many losses, it'll change everything. Too many people are like, well, I need to trade every day. No, you don't. If there's red folders, you don't know how to trade red folders, don't touch. If the market's choppy, don't touch. Then you're searching for things that aren't there, you're getting stopped out, you're getting fucked. It's okay to lose, it'll happen. Also something to remember, and the sooner that you get okay with losing and you learn how to lose, the better it'll be for you. Therefore, less emotions, therefore less stupid decisions. The next thing within psychology is a plan. If you're trading without a plan, meaning, again, your percentages, your goals, your rules for your trades, all the points that need to be hit for you to choose to get into a trade, you're kind of fucking yourself. You can't just go in there blindly. The market has a mind of its own. The market doesn't give a shit about you. You need to go in there ready, focused, knowing what you're doing, knowing what you're looking for. The next thing is technical analysis, just the basics of it. Candlesticks. There's a million different ones. What do they mean? This doesn't mean you need to learn this all by heart. I mean, you're not trading solely based off of what a candlestick looks like, but it's very helpful in knowing, is there a reversal coming potentially? Is, whatever. There's a million different candlesticks, candlestick patterns that all ties into support, resistance. What is that? If you don't know what support and resistance is, that's a big thing. You know what I mean? That's a strategy in itself. But just because you don't trade support resistance does not mean you should not know what it is. Because let's say I'm looking at a scalping strategy and I'm expecting a certain thing, but we're coming at a support level or we're coming at a resistance level, and then there's a reversal and then I'm fucked. Why? Because I did not pay attention to the market as a whole. You have to look at these things. You have to know how to see a support or resistance zone and identify that, and then go off of that and be like, okay, is this going to affect what I'm doing right now? Could it, would it, should it, whatever, you know what I mean? Like, it's all related. It's all, you know, you can't just say, this is what I see right now, I see my strategy, and that's not how it works. That being said, you can also look at simple indicators like moving averages. I don't recommend trading solely off of indicators like buy, sells and stuff, but a moving average could be very helpful in many different scenarios and strategies. And the last thing I want to touch on in, you know, the terminology of it all, and those first steps is choosing your platforms, you know, your brokers, your fundeds, your demos, all that. These are all things that you kind of want to have an idea of what you're looking at, where you're leaning towards when it comes to those things. You know, getting a funded that is affordable for you, getting, you know, a broker that you understand that's not going to give you such a hard time. So I am working behind the scenes a little bit on some stuff regarding brokers that I will talk about hopefully soon when that's all figured out. But for now, I do have a discounted funded link in the description below. If you don't want to, you know, blow $200-300 on a funded account, I work with this company every single day. That is the funded that I use every single day. They're trustworthy, they're quick, they're super easy to understand. They will mark out your prices for you. So let's say you're marking your numbers about to place a trade. They're telling you the percentage you're risking or winning. They're telling you the dollar amount that goes with that. So then you don't have to worry about calculating all the lot and everything. It does it all for you. So again, link in bio, in description, whatever you want to call it, if you're interested in getting it funded, if you're at that point in your journey. That being said, let's go into kind of mistakes to avoid, which we've kind of covered a lot of it already, but is trading without a plan, going all in on one trade. This especially happens when people are revenge trading and they're like, fuck it, I'll just throw all this in here, you know, get this amount. It's just not how it works. Over trading, same exact thing. You should not be trading 7 times a day. That's insane. We all, again, have been there, but it just is what it is, and just ignoring risk as a whole. There always is that risk, you know? And so the first steps I would recommend is open a demo. First of all, you should not be getting onto any charts without paper trading first. You should not be putting real money in, trading a funded, anything without paper trading. You have no idea how it is in the markets. You can understand something on paper without actually doing it, actually practicing it, actually feeling how it feels to win or lose. You should not be. Obviously learning and practicing and backtesting your strategy that you choose with the pair that you choose, as well as journaling those trades. Okay, you know, why did this trade go wrong today? Can I see where it went wrong? What can I do to avoid that next time? Vice versa, even when you do win. Okay, why is this a winning trade? Why did it go my way? And how can I keep doing this, you know? Very, very important. And like that being said, again, only start with real money once you are confident and you have practiced for quite some time in a demo, and you kind of understand how you react to things and just how the market works as a whole. The last thing I'm going to say on the subject is just to start slow, stay consistent, focus on learning and not just on making money. That is a big issue when it comes to trading. Most people are focused on the money. They want to make the money quick, this and that most of the time never happens because they haven't focused on learning the actual skill. They haven't focused on putting in the work in, you know, the psychology and just the discipline and everything else. They're only greedy and focused on the dollar sign, which that's just not how it works. So really just focus on learning. It's a journey and enjoy that journey. Don't be in such a rush. If you're using this as like a last resort, this needs to happen now because I need money now, you're not doing the right thing here. You shouldn't be trading. That's just not how it works. So anyways, if you guys found this helpful, make sure to let me know. I know it's a little more boring than like actual strategy videos and stuff, but it's all things that matter in a trading journey and for people who are thinking about starting to trade. So again, there will be videos coming on, you know, the terminologies and fair value gaps, candles, all that very soon. I just wanted to go over kind of everything right now. And so, yeah, I will see you guys next time. And as always, happy trading.